Hi everyone, my name is Phillips, Chartered Financial Planner and Operations Director at Niche. Today I'm going to run through a few key points to note from yesterday's budget, particularly from a financial planning perspective. This has certainly been a very eagerly anticipated budget, as far back as I can remember actually, with sights firmly on potential tax raises to cover the cost of the global health crisis. Rishi Sunak used the government's fiscal measures to further support businesses amid the pandemic, while also laying groundwork for future tax rises to repair the country's finances. There's been much speculation about capital gains tax increases, as well as changes to IHT and dividend tax, but actually the announcement yesterday saw that the impact on most is the freezing of these rates rather than more drastic measures. I won't cover off all of the COVID-19 business support measures today, but rather the topics that will affect you as our clients from a financial planning perspective. The UK economy began 2021 with yet another lockdown, but the rollout of vaccines and roadmap for relaxing restrictions is expected to result in a rebound in economic activity. While the UK economy has suffered the worst downturn in 300 years, much of the bad news is hopefully now behind us. The Office for Budget Responsibility predicts the fastest economic growth in 2021 for almost 50 years as the country emerges from lockdown, and with the furlough scheme being extended to September, as well as $5 billion in cash grants announced, there were certainly many positives to be taken from yesterday's budget. So far as some key financial planning points go, I'll run through the considerations. Firstly, the personal allowance. There's an increase to the personal allowance from $12,500 this year to $12,570 for next tax year, which will then be frozen until 2026, meaning that inflationary increases to many people's wages will mean that they pay more tax. The basic rate tax will be adjusted upwards to $37,700 and higher rate at $50,270. No changes have been made to dividend allowances, personal savings allowances, IHT and starting rate bands for savings. The impact of this is minimal. However, the tax revenue that the government should receive in return is significant. We'd expect that he's effectively kicked the tax can down the line a little, and that further more drastic increases will be announced in the autumn budget. So as far as pensions are concerned, the lifetime allowance, which is the maximum you can save into a pension without having a lifetime allowance tax charge, that'll remain at £1,073,100 until 2026, with expected inflationary increases removed. Although this will only affect a small minority of pension savers. He also announced a temporary cut in stamp duty in England and Northern Ireland, extended to September 2021. Properties up to 500,000 remaining in the nil rate band until June 21, while the threshold lowered to 250,000 until September and returning to the standard £125,000 level in October. It's important to note that this only impacts clients purchasing properties in England and Northern Ireland, not Wales, due to devolved land transaction tax. The Welsh Government is yet to confirm whether the current land transaction tax threshold will be extended beyond the 31st of March, so we expect to find out about that in the near future. The impact is that the important for any first or second properties purchased by our clients outside of Wales, but the situation inside Wales is still yet to be confirmed. There were, however, some more drastic increases to corporation tax, which will increase from 2023 to 25% for companies with profits over 250,000. For companies with profits between 50 and 250,000, there'll be a tapered rate between 25 and 19%. And for companies with profits for no more than 50,000, it'll remain at 19%. So, this should only critically impact the biggest 10% of UK companies, with many SMEs, solely owned companies, completely unaffected by this change. The market saw this as a negative point, and there were concerns that it would make the UK less attractive for investment purposes. However, the market still ended up yesterday in the green, and Rishi Sunak was quick to point out this morning that the UK still has the most attractive corporation tax rates among the G7. A couple of other points worth noting are 130% capital allowance, which will encourage business investment. Capital gains tax, the annual exempt amount will be frozen at $12,300 until April 2026, with no changes to CGT rates at present. However, we could see those increases in later budgets. The adult and junior ISAs have remained completely unchanged. The furlough scheme, the self-employment income support scheme, also extended until September. Good news on mortgages also, that the new mortgage guarantee scheme will encourage UK home buyers who can secure 95% mortgages on properties up to £600,000. So hopefully I've covered off some of the points that were important for you as our clients yesterday. But if there's any questions that you have regarding any of the impact of the budget or any wider financial planning questions that you have for us, please don't hesitate to get in contact, and I look forward to speaking to you soon. All the best.